on as a highlight. If you line up context, how many times were we down at a certain price? And if you look up here, as you could say once, you could say twice, and then you could even say three times. At some point, they are going to move through and down from that price. They're not going to hold their support forever. Conventional wisdom says the more you see a price hold, the more it's going to hold, which is just absolute nonsense. It's wrong. The more a price is working as support, the less and less likely it's going to continue to work as support. Now, you see it come into here. You've got a green line, which is us showing icebergs, which are buy orders that are bigger than shown. If you take a look down here, this chart is obviously like a microscope of this chart. See a little bit more detail. Inside this green line, they've done 560. All right. Now, understanding that the support level is not going to work forever, and we're going to move through it, south of it, down below it. You want to look at this to see longs, which we show with these green bars. You want to see them pop out like they are doing, because when longs are buying it above where they think it's going to be support, they turn into sellers that help say, shoot, I'm wrong. Wrongs are long creates downside. Longs that are wrong create downside. So they're leaning on this big order. When it goes, it goes. When the order goes, so does their idea of the market going to bounce, and then they chase it. And what are they chasing it as? Sellers. When a long opens up that long position, he is now dressed up as a seller. Now, with that being said, we'll play it, and I want to show you the moment you got enough green in here. I actually want to show you something before that, before it breaks through. Right in here, it doesn't break in. It doesn't break through, rather, because too much red is there. See this red? Too many shorts playing it. So it's got to go up a little bit before it comes back down. So let's play it again. Now it's got all, let me stop it. It's got all the ingredients to go down. You got these longs leaning on it. You don't have too many shorts. And then something that a lot of people, because it's newer, the chaser over here. When it's gray like this, it's motivated sellers. When it's gray below price, it's unmotivated buyers. Motivated sellers when it's gray like this. I won't get into too much detail beyond that, but motivated sellers when it's gray kicked out like that. You got longs that are leaning on this order. You've got the context of how many times we've been down to this price. So to be surprised that the market flew down in that instance, you'd have to go get a CAT scan. Now, here's another thing that showed continued downside is look at these hollow bars. You're like, well, what's that? That's showing sell stops or longs puking. Sell stops are generally going to be below swing lows like this, right? We actually show it in obvious places or in some places that aren't obvious. We show it with not only the profile look to it like that, but then you look up here and you see how big it is compared to other areas of longs puking with sell stops. You also see it here with this number 782. There's a minus because they were sell orders. Sell stops generally are order types used for longs to exit. Puke and exit mean the same thing. Exit their long position. You don't believe me? What do you use mostly to exit your position, generally for a loser? Oh, I use a sell stop, many would say. So it's clear that and very accurate to make that determination that most sell stops are used to exit a long position and mostly for a loser. So you get that right there. You get the breakout, and now you get the market with all these longs that puke. If it doesn't get back above where it flew through, it's bearish, man, and there's more downside. We said that coming into it. We said it underneath. Look at all these longs that puked, and we can't even jump above it. If we don't jump above it quick, there's more downside on this price action. And then there was. And then you find this iceberg, another iceberg, which scares price a little bit but not much to get us above even. You see my cursor on the recording moving around to show the same thing that I'm articulating now. And then we go back down and same concept happens. As soon as they get through this iceberg and get enough people that are leaning long on it to get through it like that, bam, flies through it. Another thing happens. It finds another iceberg. What's interesting about this iceberg is he drops his order down a few points from like 93.5 down to 88.5. Price generally follows orders, and it does in this case. We know he dropped it because we show it -1. It means this order's moved once. Where did it move from? Up here. Same order ID. How many has he done? 855 up here. He's showing 15 contracts, but he's done 855. When he moved it, price followed it. And then you see all these longs getting stuck all the way down. And then they trade through them a little bit. And they're like, oh, they got too many to do. Some sell pulses into it. There's not enough longs leaning on it. Shorts come in to try to play it because they've seen it work time and time. And that's when it doesn't work. All these sell pulses should get it to go down. When it doesn't, that's generally the clue that it's going to go up. Look at all these shorts that come in. These reds do not show sellers. They show shorts. It's a big, interesting, and important separation or difference. See the sell pulse and these sell pulses? Those are those pink boxes. That means that a market order of over 100 contracts hit the market. And what did it do? Did it go down? No. It laughed at the order. And when you generally get that and you got this big buy order, he's done 1,100 total, okay? 249 at this price, 855 the price above 1104 total. How many more has he got left? He could have 2,000 left. And the price is already broke a bunch. And when you get these sell pulses in the market that creeps above it like that, that's bullish. That's stop trying to get short, maybe, at least. And then our laser changes, which is a whole nother skill set to see where more shorts are stuck than longs. And then you get these shorts come in to show you that this pop is probable. This is reading order flow. Everything else you're learning from some college kid that drank too much, but he's good on YouTube. Or some, well, I won't get into it. The whole premise, though, is when you have this area of longs that puke. Let me roll it up. Remember this big area of longs that puke? There was first going to be some resistance with these longs puking, and there was right there. And then I said, they're going to be right in here. There's going to be some resistance based on where previous longs threw up their position. And so as we walk through, the market goes up to it, stops, and rotates back down. Trading is about coming up with your idea, step one, qualifying it with an area you think you're going to play ball, step two, and then knowing the order flow and the qualification process of where other people get stuck so you could actually click the mouse to give yourself the best chance to find the location that's going to start paying you ASAP, step three. Everything else gets lost in the shotgun approach of not really knowing what you're doing, not having a plan, then complaining that you can't stick to the plan. It's because you don't have it into 3 steps. Some people are terrible at step 3, but they're working on their step 1 and they don't even know it. Their step 1 is actually good. Their opinion as to where price might go. Their step 2 and 3 is bad. They don't have it because they don't realize that this is the whole progression of being able to take the business, create a skill set, what goes into it, the technique, the concepts. That's what gets missed. If you don't know what you don't know, you gotta fill that void. Because most people will be down rabbit hole city their entire journey and never gave themselves a chance because they're not reading what the market's doing, not just what price is doing, what the participants are doing. Where the participants are saying, holy SHIT, I'm screwed. Where do you say that? You're an individual. You don't have that much influence. But if you're part of the herd and the herd is saying that, those are the inflection points where moves begin.